It's late at night in 2011. Your PC tower is humming in the background. You stumble onto a clunky, poorly designed web page that looks like a straight-up scam. That line on the screen seems absolutely absurd looking back. It used to trade for pennies, skyrocketed to $30, and right as you're staring at it, it nosedives back down to $4. This doesn't look like an investment. It looks like a doomed internet experiment. You don't buy that this is the future. All you know is this: if you buy in now, you might have already missed the boat on the dirt cheap entry. Or worse, you're stepping right off a financial cliff. In that exact moment, you happen to have $10,000 to your name. It's not retire on a yacht money back then, but it's enough to send you down two completely different paths in life. You could convert it into Bitcoin invisible lines of code that nobody even understands yet. Or you could save it for a down payment on a house, the right path. The path every responsible adult takes. If you chose Bitcoin, your neighbors would have thought you lost your mind. What's your move? But you'll quickly realize that pulling the trigger is actually the easy part. The real challenge is how you survive the next decade without folding. Let's say you actually chose Bitcoin. That $10,000 turns into cold, invisible numbers on a screen. And very quickly, the regret sets in. Because reality isn't a smooth, upward curve. Surprisingly, you discover that the most agonizing part isn't when it crashes, it's when it pumps. When it's up, you feel like a visionary genius. When it's down, you feel like a total sucker getting played by the market. The absolute torture is that you have zero proof you made the right call. You start doing mental math obsessively. It doubled. That's free money. It hit $50K. There's the house down payment back. It hits $100K. Your heart starts racing. You've never been this close to life-changing wealth. But every time it surges, it's the ultimate test of human nature. Do I cash out now? Do I just take the win and be a smart, normal person? When it crashes, the urge to sell is even worse. The visceral fear of watching a fortune evaporate keeps you up at night. You're terrified that if you don't sell, even your original $10K will go to zero. Fast forward to 2013 and Bitcoin hits an absurd all-time high. The profits you're sitting on could buy you a really nice car. But if you hit sell, the rest of the legend goes on without you. By 2017, the same people who called you crazy are quietly asking you how to open an exchange account. People who dismissed you are calling you lucky. The numbers in your portfolio feel completely unreal. But the stress has never been more real. Because the chips on the table aren't your initial $10K anymore. You're gambling with life-changing, class-jumping wealth that is already in your hands, playing a staring contest with the devil. Holding through the red is painful, but holding through the massive green, that is pure purgatory. To hold all the way to 2026, you didn't just survive price volatility. You survived countless sleepless nights where you could have walked away, but chose to stay. So, 15 years later, when the people who missed out look at the chart and casually say, "Man, I should have just bought some Bitcoin back then." It sounds so easy, doesn't it? But what if you never touched that crazy code? What if you took the path everyone agreed was 100% correct? Let's say you didn't buy Bitcoin. You kept that $10K, saving it for a house down payment. You spend your weekends at open houses. The realtor meets you at the door, handing you a printed spec sheet. You walk into the living room, mentally placing your sofa, decorating the bedroom, mapping out your morning commute. Then you're sitting in a bank office. The loan officer breaks it all down. The mortgage, the interest rate, the down payment, the insurance, the property taxes. Finally, you sign a mountain of paperwork, and they hand you a key. This is nothing like Bitcoin. This time, nobody thinks you're crazy. Your friends ask, "What neighborhood did you buy in?" Your family asks, "Is the monthly payment manageable?" The bank doesn't treat you like some internet gambler. They meticulously review your income, your credit score, your W-2S. It all makes you feel like you've finally arrived on the socially approved path. You think the hardest part is over. You think as long as you make your monthly payments, life will just be stable forever. Until a few months later, the house starts demanding its true cost. It doesn't hit you all at once like a crypto crash. It's a slow burn. At first, you thought the mortgage was the biggest hurdle. But once you move in, you realize a house doesn't only cost money on the first of the month. One weekend, the washer breaks. The next month, your homeowner's insurance premiums jump. Winter hits, and you're suddenly praying the HVAC system survives the season. Individually, none of these are disasters, but they serve as a constant reminder. This house isn't just an asset you own. It's a money pit you have to keep feeding with your paycheck every single month. You start comparing price tags at the grocery store. You quietly cancel that annual overseas vacation. Slowly, this house becomes more than just a place to live. It starts dictating every decision you make. One day, a better job opportunity pops up in another city. Better pay, higher ceiling. But your first reaction isn't excitement. It's doing the math. If I sell now, how much will I lose in closing costs? If I buy again, are the mortgage rates going to be worse? If I rent it out, who deals with the nightmare tenants? You begin to realize the house gave you stability, but it robbed you of your flexibility. It doesn't flash on a screen asking if you want to sell every day like Bitcoin. It's much quieter. It just silently drains your checking account every month, keeping you working, keeping you paying, keeping you exactly where you are. 15 years later, you log into your mortgage portal. You see that the massive loan that used to keep you up at night has actually been chipped away. You check Zillow. The house is probably worth a bit more than what you paid for it. It doesn't slap you in the face with some absurd, unbelievable number like crypto. But you see a different kind of progress. You owe the bank less. The property might be worth more. Your equity in those walls has actually grown. It's the slow, quiet accumulation of middle-class wealth. That's the biggest difference between real estate and Bitcoin. Bitcoin shoves its price in your face 24/7. When it pumps, you want to sell. When it dumps, you want to sell. A house doesn't do that. It doesn't pop up a daily ticker asking if you want to exit your position. It just sits there. Every month, you pay the mortgage. Every year, you deal with a few new repairs. Over time, you didn't hold on to it because you made the right active choice every single day. You just got pushed along by life, and you never left. So, Bitcoin tests your ability to resist the urge to hit sell. A house tests your ability to survive the relentless grind of mortgage payments, property taxes, and repair bills. 15 years later, you're sitting at that same desk. On the screen are two entirely different lives. Tab 1 is your crypto wallet. If you legitimately held from 2011 to today, that number might be so massive you can't even process it. You'd double check it. You'd probably think the decimal point is broken. Tab 2 is your mortgage account. It's not shocking. There's no jaw-dropping number that stops your heart. You just see your remaining principal and your home equity. Slowly, it hits you. These two choices didn't just alter your net worth. They fundamentally changed how you lived every single day. If you chose Bitcoin, you experienced volatile wealth early on. You might be incredibly rich on paper, but as long as that ticker is moving, you can never truly exhale. Because you know this life-changing money today could get cut in half by tomorrow morning. If you chose the house, you felt a completely different kind of pressure. There's no daily volatility, but the weight of it bleeds into your routine. Then one day, that dream job pops up in a new city. Great salary, huge upside, but you aren't thrilled. Your first thought is the house. How long will it take to sell? Can I just rent it out? If I have to buy again, are the mortgage rates going to absolutely wreck me? Bitcoin makes you terrified that the wealth you see today will vanish tomorrow. The house makes you terrified that you might not be able to afford the stable life you've built. And you, watching this right now, which kind of pressure are you carrying? So ultimately, the question isn't about which asset won. It's about this. If you could actually rewind the clock to 2011, which of these two pressures could you actually survive for 15 years?